All right, good morning, everybody. It is Thursday, December 2nd, 2021, and we're going to start with our pre-market analysis on the S&P 500 futures market. Just to really quickly review yesterday, we did have a little bit more weight on the bullish side, although, we're still in some ambivalent conditions, and obviously the overall trend is down here. But we came into yesterday expecting some type of bullish push. So right out of the open here, as you can see, we did push 4607 to 4650 for just under a 50-point push. And then just after our morning trading session, the market found a high pretty much right up where we found highs from the day before that, and then failed. And so we got this really strong sell-off, which is bringing us into this morning here. And as you can see, the 38% retracement for this push down sitting here just about 45.57, which was the low from yesterday. And we're going to talk about that low really quickly. Push through that, and we can't really come up to test it right now. Somewhat of a little bit of a bearish clue here. The fact that we can't get through the 38% retracement and that major swing low there. It's still possible for them to pull back lower and bounce right through all of it. But right now, we're seeing kind of some trouble at one of those critical levels in the market. So let's go ahead and jump up to our ultra high time frames. We do have the official close on our quarterly chart and our monthly chart. So we'll take a look at that real quickly. Looking at the quarterly here, you can see this is the bar that closed for the last 3 months, and somewhat of an ambivalent looking bar, although a little bit more of a bullish argument because we did close higher than we opened and have more of a wick on the downside there. So a little bit of a bullish, ambivalent bar with more bullish weight to it. And right now, no signs of exhaustion from a divergence perspective. So everything still looks really strong from this quarterly perspective. On the monthly, this is the candle that just closed, I believe, not yesterday, Monday afternoon. We got that close, Tuesday afternoon, got the close. And as you can see, we pushed right into the back end of this trend line that we've had drawn on the screen for, 4 or 5, 6 months. So we came right into the back end of the trend line, got the rejection, and as you can see, we've been talking about this potential bearish signal from this divergence perspective off that high. The issue with a monthly chart is you need to wait for this candle to close and then for this new monthly candle to close so we actually have a peak to compare. Right now we do have a pretty strong bearish argument on the monthly from that all-time high. And then on the weekly, we also do have some exhaustion patterns up top here on that attempt to push higher. Now, we said yesterday that if we look at the low of the new weekly candle and we look at where the lows are on RVI, we are starting to get somewhat of a bullish divergence off the lows. However, we talked about the fact that price could still come down 200 or 300 points and come all the way down to the low that we're comparing on RVI, and we would still technically have a bullish argument, assuming this still has, assuming the RVI is still lower than it was back here. So that's not really helping us out for pinpointing a bottom in the market. But for now, and as you can see, we did sell off lower. So now this weekly bar has pulled back even deeper, but we still have that bullish argument right now. So this is something we're going to have to watch and see. Maybe it'll get a little bit clearer when we have a daily bullish signal off the low as well. But keep in mind that in a downtrend, now that we are pulling back from the all-time high, we are going to get bullish reversal patterns. However, if the bears are really strong, they're just going to continue to sell off and break through those. So right now we are seeing that on our monthly, our weekly, somewhat of that bearish case off the all-time high. And then on the daily, we had that really clear bearish divergence when we did push up and officially close for that day on November 22nd. We knew from November 22nd there was potential for some type of pullback or sell-off. The issue is that when we pulled back, we got a bullish counter argument here, and the market did attempt to push back to test that high. We got just about 61.8 retracement of this whole kind of push down from the all-time high to the low over here on November 23rd, and then failed. So it did turn and fell in an area that would make sense from a retracement perspective, and now we're starting to pull back. Now, yesterday, I believe we talked about the potential bullish case off of the low. And actually, this is going back to Tuesday. So on Tuesday, we did have a bullish argument off the low. However, as you can see, Wednesday here, we did sell off a little bit deeper. And so we have pulled back lower. Now, the case is we have a lower low on price compared to this swing low over here, and a lower low on RVI. So there's no longer a bullish case off that low. And right now, there's really nothing I could say from my divergence perspective. This bullish divergence we got on November 23rd did get some follow through for whatever it was, maybe 70 points or something like that. And then the failure happened. And now we don't really have anything from a divergence perspective to help us out. Now, obviously, just looking at the chart right now, it looks pretty heavy. Looks like we are due for a pullback. And there are two things that I want to mention here. Back before we actually pulled back really deep like that, we talked about this level here at 45.57 being the 38% retracement. We talked about that swing high there at 89.50 that would make sense to hold. We essentially held it back there on the 26th, dipped a little bit below, and then came back up. So we were holding there. We talked about the fact we had the 38 at 57. We had those swing highs back here at 39. And then 50% was right at 4,500. And we talked about on this pullback here, wouldn't be too surprising if we pulled back all the way back to 4,500 here. And even if that happens, or even comes a little bit further down, we still aren't out of bullish territory here. And holding these levels below us would still keep us in this bullish market. And so what ended up happening is we came down and we actually bounced to the tick off the 38% retracement just a day or two ago. So we came down and the low of the day was literally the 38% retracement to the tick, bounced off of it, and then look what happened yesterday. We came down and essentially bounced directly off 4,500. So not too surprising again. And you can see that we did get a little bit of follow through in the overnight session, but we're back down to the lows where essentially where that new bar opened for today. So looking pretty much like the last two bars here, looking very, very bearish. And again, we don't have that nice bullish argument from the lows right now. So overall, daily is looking pretty bearish. So essentially agreeing with the weekly and the monthly with that bearish case off the highs. And then on the 4 hour, you can see that we're in that situation where the highs of the day do end up printing a bearish divergence. But then when we come down to the lows, there's that 45.57. You can see it right off to the tick. There's that one right around 45. I believe we were talking about what? 45. Yeah, so there's 57. There's the swing high back there, so 45.90. Every time we came down into that 90 area, we got a bullish divergence. We came down into 57, got a bullish divergence, and now we're right into that 50% retracement, remember, of this whole push up from the October 1st low, and got another bullish divergence on the 4 hour here. The issue is that every time we get one, we do expect some type of pop, but then, you know, again, the bears jump in the current market and continue to sell it off. So this morning there is a bullish case off the low. There is a little bit of a subsequent bar bearish argument from the high we made in the overnight session here. Not the most beautiful thing that I like to rely on, but it is there. And then on the 60-minute, we get agreement with a really clear bearish divergence from that overnight high. We also don't really have the most beautiful bullish argument from the lows. You could potentially go all the way back to this swing low and come down and make the argument that we pushed much lower on price, but the RVI is technically just a little bit higher. So you have the argument there, but I don't love it. I don't have a nice local divergence, so I think there's more of a bearish argument on the 60-minute as well. So as you can see, there's a little bit more of a bearish case as we build up these time frames. And then jumping down into our intermediate time frames here, again, from the previous daily low, I'd argue not really a bullish divergence at all from down there, unless you were to extrapolate all the way back to the lows we made when we were up here. Not something that I like to do, but we do have that bearish argument from the overnight high as well on the 30-minute. So hopefully this is becoming pretty clear to everybody. Our weekly, our daily, our monthly, our 4-hour, our 60-minute, and our 30-minute all have a little bit more weight to the bearish side this morning. And then our 10-minute essentially, it doesn't really have agreement with either case, but that's okay. Like I said, if we have essentially every time frame, if you're familiar with my strategy, when you have every single time frame except for one time frame, if they're all agreeing except for the one time frame, you can essentially rely on what all the other time frames are saying. The 10-minute here, you can see that you can make a little bit stronger of a bullish argument from the overnight or from the previous daily low, but there's really not the strongest argument for the bearish case off the overnight high. So maybe not the strongest agreement, but right now it looks like we are going into the morning with a strong bearish bias. Just keep in mind here that if the market does break above 38.25 and it can get through 74.25 up here, a lot of those bearish arguments are going to slowly, fade away. So if the bulls jump in and they start to really chug here, we might want to actually start to look for trying some longs off of pullbacks, especially once we get above 50% of that previous day. But if they can't get through those two critical levels right there, we could essentially expect continuation to the downside. And if that does occur, let me see if the 30-minute has enough. The chart is, it's going to be harder to kind of zoom out and look at that. However, let's take a look. Let's go up to the higher time frame and just look at what we have below us here, and then we're going to jump to our member section and start looking for some trades coming into the open. So looking back to the 60-minute here, again, we held essentially 50% of this entire push up, right? So right now, maybe I need to go the 4-hour. There we go. So there's the 50% retracement. So if they do not hold above the previous daily low, which is, we would expect actually a break this morning. So if they do break, we have some levels below us to watch. 61.8 being just about 43.50 there, 44, 43.50. And just keep in mind that we do have some decent resistance in the market right around 44.69. That might be plus or minus a point or two, but somewhere right around 44.68.50, 44.69 would be an expected area for some support in the market if the bears continue to sell off. And then again, we do have 44.50, and then a little bit deeper, maybe into 44.21. These are levels that I think make sense for some type of support in the market. Remember that if the bears are going to be strong this morning, even though there are some decent support levels, they could go ahead and just cut through it like butter and just, like hot knife through butter and just go ahead and sell off. There's always that possibility. Again, if they do find some type of support and they really start to chug here, we're going to have to switch that bias and start looking for longs, expecting the push into the previous daily high, and then getting through that is going to open us up back into that all-time high territory. So I'll leave it at there for now for those that are watching out there on YouTube and on the DT Lab community. And we're going to jump over to the member section. So have a great rest of your day. I hope everyone got a little bit out of this, help orient yourself coming into the open. And as usual, if you have any questions, feel free to send me a message on the Discord server or on YouTube or Facebook. And if you're interested in joining us for our morning pre-market every morning of the day, and then to trade with us for an hour and a half every morning, and then our study session, which is weekly, where we review the week and go over the best trade setups and kind of have some, it's essentially like having an ongoing course every single week where we review really good trade setups. If you want to join us for all that stuff, just send me a message and we'll get you set up. And with that being said, I hope everyone has a great day, a great weekend, and we will see you back here next Thursday for our public pre-market session. So have a great one. Okay, so let's see if I can get my screen up here. Scott, I was in the other room, so I don't know if you are here right now and you can hear my voice, but we were, and I don't know what's going on here if I want to share my screen. There we go. Yeah, so Scott, we were doing the pre-market in the other room, so I don't know if you knew that. Oh, okay, cool. You must have jumped in right at the end there. So let's take a look here. The bias is an expectation for a break of that previous daily low and a chug lower. But remember, anything's possible. Bulls could jump in and really start to rip it. I'm going to be looking for some shorts here until the picture changes. And again, 38 quarter, 50% of the previous 4-hour level that we watch. And then 74 quarter is 50% of the previous day. If we can't get through these levels to start with, then yeah, no real faith in the bulls this morning. So until that occurs, I will be emphasizing shorts. And right now, there's really no trade. There was a beautiful trade right off the eye level here when I got to the charts earlier, and I was able to get a little bit out of that. But we're now, it turned after about a 7 or 8 point push there. It was just under. It was like a 9-point push and then a failure. So I was able to get a little bit out of it, and then it failed. And let's see here. This green line, it must be from a really long time ago now. Let's see. When did we put this on the chart? Back in October 19th, over a month and a half ago. So I don't remember why we had that. Probably because it was that green bullish line in the sand for whatever day we were looking at that morning. And I'm just looking to see, does it make sense to even keep this on the chart here? Just looking to some previous price action. Shit. It's the last time we were even down here on the 1 minute. We might not even, yeah. I'm going to get rid of that line there because I don't think there's strong relevance. Let's see. And then, of course, we want to get the other eye levels on here. Oh, look at that. 0650. Bounced right off of it. Beautiful. And then here, we want to make everything visible. So look at that. A sell-off right off 21 quarter. Came right down to 0650 and got the bounce. Doesn't get much better than that. All right, so I'm just trying to get all the levels up here on my 10 minute, and then I want to start looking for some levels below us that make sense as targets, really, not as places to buy in a sell-off, but targets for shorts. So let's look up to the 10 minute and zoom out a little bit so we can see. Well, 10 minute is probably going to make it more difficult because we have to go back really far. But in the really small intermediate time frame here, let's bring this over. We do have the previous daily low here at 97.75. Even if they're going to sell off, could react as some type of small bounce off that level. So we have that below us. 0650 has already been tested now, and we have basically the eye level or the prediction point at 03 there. So basically 03 and 97.75 we would expect as some potential bouncing from that area, but it could just be a 1 point bounce. We're not expecting a reversal. So potential bounce at 03, potential bounce at 97.75. And something interesting to note here, that 97.50 is an eye level we've had on the chart now for, and I don't think I highlighted the right thing there. Just give me 1 second. I believe we put this, yeah, back November 13th. A long time ago. In fact, I think that was it doesn't even make sense to me because I'm trying to think of when the contract rolled over. It's been on there for a while, and so 97.50 we came down and we bounced 1 tick in front of it yesterday. Just another, there are so many days where the high of the day is an eye level and the low of the day is an eye level. Sometimes to the tick, sometimes it breaks it by 1 tick or 2 ticks, but it's sometimes the eye levels really nail those highs and lows. And looking at what we're seeing right now, we have this little 10-minute bullish divergence right off our eye level at 0650. It is one of those really extreme retracement levels, so we chugged through 38.50 and 61 here. This is probably more like a 75% retracement area, but they did just print a nice 10-minute bullish signal, and let's see, yeah, so that's like 75 if not a little bit more. So right now this bounce, it does make sense from that perspective. And let's see here. I forgot that I'm still streaming here throughout the YouTube land here, so let me close this out.